Thank you for coming. There is still another about 2 to 3 minutes time. We will wait for the other participants to come in. This is the Wednesday Strong Mighty Enterprising web series again. And today, for those companies who have who is lack of the cash flow and so forth, I think it's a good news for you all. So today we'll be talking about the low cash flow. It's not an excuse not to protect your business assets. Yeah, so there are quite a number of the big news coming up, and the government is trying to push for their results after the 100 days. For you who does not know, the government is actually organizing a so-called an exhibition. Those who are here, they are organizing a so-called exhibition in KLCC. If I'm not mistaken, they booked all the hall, and they're going to showcase, all the ministries going to showcase what they are doing for the people. So when you have time, go and visit them. I think it's starting tomorrow. Yeah, let's see who is here today. Okay, if possible, for those who are here, if you can, same thing, please put down your name, your company, and what industry are you in, so that later on when we chat about the topic, we can talk about different industries or even related to your companies. So let's introduce ourselves. Take this opportunity for us to network among ourselves as well. Okay, let's see who is inside here.
Yeah.
Who is inside? Can everyone put down your name and which company are you from? Just to introduce yourself, please. Thank you. We are going to start in 1 minute time. We just give another 1 minute time for the other participants to come in. Today, no ladies. Okay, for the first session, we got ladies. Second session, we got lady as well. Today, all guys only. Okay.
All roses, no thorns.
Yeah. Okay, I think that we better start right now. Yeah, good evening, everyone. Again, I'm King Tik over here, the managing consultant of a Bizsphere Brand and Marketing Group, a SME branding, marketing, and business transformation specialist. Thank you for joining our third episode of the Strong, Mighty, Enterprising SME, the Financial Management Weekly Web Forum series, presented by Cofundr. I have explained how the program name came about, but there are many still asking about why Strong, Mighty, Enterprising SMEs. So just let me enlighten you about Strong, Mighty, Enterprising SMEs again. We might be small, again, SME is small, always small, but for us is that we have strong fighting spirit and we are able to weather the storm. So we rather use the word strong. Then some of us might maybe already a medium-sized company, but to be successful in this business, being big is not the only key factor to success. We need to be mighty in everything that we do and how we do it. So the word mighty comes about. We are not only an enterprise, but we are with the strong enterprising spirit, being able to find new ways to pivot, creative in finding new opportunities, and be innovative to look for opportunities. Bizsphere will strive to continue to this Strong, Mighty, Enterprising SME program as a long-term platform to share more insights to SMEs, and we look forward for your support. And this is the third series already, and we continue getting support. And thank you very much if you have joined us before on the first and the second one. On the first week, we discussed about budget. Last week, we discussed about the government incentives and grants. Tonight, we discuss on a not really popular but critical financial topic. A lot of companies, a lot of businesses, SMEs might have neglected this issue. But for me, after I have chat with some of the business friends, I think this is a very critical information that ought to be shared more, which is how can we protect our business and protect our business asset. Okay, but before we continue, let me remind all of you that please mute your mic. Okay, please mute your mic. And should you have any questions, please write it into the chat box. My team would actually compile the questions, and then it will be actually passed over to myself and the panelists, and we will have the question and answer session with the participants after our dialogue. Now, right here, let me first introduce our distinguished speakers over here, or panelists over here. First, we have Sean. Okay, Sean, the handsome guy over there. Okay, started his career as an auditor with KPMG 5 years ago, and in 2006 started his own advertising agency. Okay, Sean, we can do a lot of partnering together. Sean is actually specializing in outdoor media consultancy. Okay, so for us, Bizsphere, we do strategic branding. A lot of our clients also have a need to actually advertise in the billboard. But the thing is that outdoor media, most of them are billboard. Right now, cash flow issue, we see how can we actually make it more affordable. In 2011 until right now, Sean, together with his partner, has been in the F&B business. So I believe Sean is so-called a serial entrepreneur, always going to find new ways to actually look for money. And together they manage the sushi restaurant brand, which is the Sushi Tei, on a regional basis. I believe is in the northern region.
Northern region, yes.
Yeah, northern region, right? Yeah.
Correct.
So tonight, Sean, we will need you to really share your viewpoints from the SME perspective, okay? In terms of the how do you actually protect your business interests? Later on, we'll chat about that. Okay.
Great. Thanks for your introduction, King Dick.
Thank you, Sean. Now, second, we have Eddie over here. Now, Eddie is the country manager of Cofundr Malaysia. Okay, executive director of the Cofundr Insurance Brokers and the principal officer for Cofundr Limited. Okay, hi Eddie. Hi. And what does Cofundr Malaysia do? Okay, they provide insurance booking, risk management. Okay, risk management is a key thing that a lot of the bigger companies would put a lot of emphasis into risk management. But for SMEs, not many SMEs put in any, not to say, don't put in any consideration. If there are some consideration, it's also very minimal, okay, into risk management. And also, they also doing claims consulting services worldwide, supporting clients through more than 15,000 specialists in over 90 territories in worldwide. Wow, very big, Eddie. So 15,000 specialists. Wow. Okay. So meaning that in all over the world, you have your footprint all over the world right now.
Yeah, we have offices in like 40 odd countries. The remaining 40 odd would be our partners. Yeah, we are not in like own offices. You know, there are certain places we don't go to. Like I call them the last frontier, like the Laos, the Myanmar. So we work with the local brokers in those countries.
Great. So Eddie is a very experienced corporate person now. Okay, he brings to the corporate buyers a balanced structure of the perspective of insurance procurement. So insurance for us, for personal people like us, we say, hey, insurance, don't call me. But the thing is that for business, insurance actually is something that will bring you forward. It's something that will protect your business. and it gives a peace of mind to your suppliers and your partners as well. Okay, it's very important, and effective solutions in management of the operational and also enterprise risk with the ultimate objective of a cost-effective risk management program. So cost-effective is always the key word for the SMEs. Okay, it's an honor to welcome Eddie to the panel and get his perspective on the risk management via insurance, particularly for the SMEs over here. Thank you for coming, Eddie.
Thank you, KT, for inviting me.
Yeah. Now, Paul has been with us for the last two sessions. Okay, I will not go in lengthy introductions on Paul. Basically, Paul, he has dedicated his career in the financial industry, especially providing the financial opportunities to those that traditional models that often overlook. Like for us, if we want loan, we go to commercial bank. Okay, insurance company, we go to insurance. Okay, Along, you go to Along, but don't go to Along, please. Okay, please don't go to Along. Very, very dangerous. I know that it's very tempted to do so because of the financial cash flow right now is very tight. But Paul, he has his passion and dedication towards the democratization of the finance that has led him to found Cofundr, which is the presenter of our program, with the purpose of providing financing and investment opportunities unavailable via the current institutional models. So he joined us tonight to share about the insurance premium financing. Insurance premium financing, again, is a very new term to me. Despite that I'm in business for so long, I do not know about, there's something called insurance premium financing, a financing product that unique to Cofundr actually. Now, as many of you know, okay, I have been involved in SME related policies, programs, transformation, and support related matters. And I always try to find out what are the common challenges among the SMEs and try to find information, options, and answers for the SME communities. But not until recently that I found this good friend over here, Paul, who is my ex-colleague many years, decades ago. Okay, that now you all know how old we are. Okay, so but not until recently that I found that I have missed out one very critical aspect, which is managing our business risk through insurance. Okay, for my business, frankly, I only have a very minimal insurance, which is the fire insurance. That's all, very basic, not more than that. But I believe that to have a healthy growth of the businesses, we need to consider more than this. We need to consider more than this. Okay, like for example, if we talking about like us, health and life insurance that we have right now, we subscribe to it to safeguard our health and our family well-being. But for business, we need to safeguard our business asset as well. I sometimes find it stressful to finance my own personal insurance. Okay, age getting older is more expensive and higher premium. I'm sure business, especially right now, is facing even more burden right now to finance their insurance premium during the COVID-19 pandemic. So it is very important topic. Not many people care about it, but it's very important. So that's why that we are discussing it today right now. Okay. Now, is your business still insured? Okay, is your business still insured? If yes, is it adequately insured? Okay, that is the two things that we would need to focus on today. Okay, according to a report from the AIG, 50% of the Malaysian SMEs are not insured. That is a very big number. We have approximately, including the micros, we have about 1 million to 1.1 million of the SMEs. 50% SMEs not insured, meaning that about 600,000, about 550 to 600,000 companies have not insured their business. While those who have insured, 85% of them are underinsured. People like me. All these businesses, okay, including mine, sadly, is risk. We are at risk, actually. We are at risk. So that's why that today I would need to ask a lot more questions to understand what's what is this about this business insurance and risk management? We'll be talking about that. Now, before where we start, I would have a request, because on the first session of the our web forum, I forgot to get a group photo. So right now, I would like to request just a very fast one. Just open up your camera. I want to see whether there are any rows or not, because right now there's only the thorns over here. Okay, whether there are any rows or not, just open up your camera. Let us actually show ourselves. I know that right now is 8:45, still early, not too late. Let's open up our camera and we take a group photo. So next time when we share our next forum, people will know that a lot of people are interested in this SMEs topic. Okay, Zach and Divi, are we ready? Everyone open their camera. Do we still need to wait?
A lot of people still haven't opened their camera.
Yeah, please. I will give another 10, 9, 8, 7, 6. Everyone is very shy. Okay, let's do it right now. Okay, maybe especially the ladies. Well, at night already, after office hour, so do not want to make up ready, don't want to be on the camera. It's okay. Now let's take a group photo. Zach, can we do that right now?
Yes, sure.
3, 2, 1.
One more.
Thank you. One more.
Yeah.
You can show your hands also. Whatever
3,
signs that you want to show. Okay.
1.
Okay. Great. Okay, good. Now let's continue. First, I would like to start on the so-called, I would say that the stage lah. Okay, the stage. Okay. Talking to who? I would like to start to talk with Eddie. Now, Eddie, you are in the corporate scene for so long. Okay. Although that you look younger than me, okay. So can you briefly tell us what does Cofundr Malaysia do? Because before the last week, I still do not know Cofundr Malaysia. Okay, so can you just explain to us what does the Cofundr Malaysia do, followed by giving some introduction of what kind of the risk management or the business insurance available in the market that we, the SMEs, especially SMEs, should take note of, because business like me, even though I'm doing business for about 15, 20 years already, but I still, a lot of things that I do not know about the business risk and business insurance. Maybe you can enlighten us on that. Thank you very much.
Sure. Thank you so much. And thank you for setting the scene. You almost made insurance sexy. Okay. But you know, it's one heck of a boring subject, but it's something, as you made mention this now, it is an essential part of our life. Yeah. So like, for instance, if you go and finance a house with a bank, the bank will definitely insist you have one fire insurance and perhaps also mortgage reducing term assurance, right? So it is part and parcel of life. There's no way, no getting around it. Like, for instance, if you drive a car, clearly you need to have a comprehensive motor insurance, for example, if not a third-party liability cover, right? So, you know, as far as Cofundr is concerned, perhaps let me just, indulge me for like 2 minutes. I'll talk a little bit about Cofundr and then what we do for, in particular, SME clients as well. Cofundr is actually relatively quite new. We've been around for about 27 years. Our head office is actually in the UK, as Katie was mentioning. We have, close to, I think now we have close to 15,000 people that works within the group, and our premium throughput globally is US 10 billion. Yeah, and we are, like you said just now, we are in the 90-odd territories. All right, coming to Malaysia, we are actually internationally the world's largest independent broker. So by extension, if we are the largest in the world, we are actually largest in Malaysia as an independent international broker. When we say independent, we are primarily employee-owned, and we are not listed on any stock exchange. Yeah, and unlike the marshals and some of the other people. Okay, anyway, coming back to Malaysia, we have 4 offices. One is called Howden Insurance Brokers. The other is Howden Takafu Brokers. And Takafu, as some of you may know, is actually Islamic insurance. We are also MOF registered as well as a Bumi status. Yeah, so besides that, we have 2 other operations in Labuan, an offshore broker, as well as rent a captive facility. Rent a captive simply means that, like, take for example, the SME Association, you have a lot of other trade associations. By themselves, singly, they may not have in that sense, the purchasing power. But collectively, as a group, you could then leverage on the people from the light industry to actually, who are within the association, to look at, challenging the norm. And for instance, working with us in terms of how you can leverage on that scale. Yeah. So that's what we do. And I don't think I want to actually dwell further, because I'm going to take the whole of Paul's and Sean's time. But we'll definitely talk about it at another forum, I guess. Okay, but anyway, coming back to Howden, in Malaysia, we have 200 employees. We are in KL, obviously the head office, as well as in Labuan and Johor Bahru. Yeah, we are actually now in Menara Etika, which is in the Bangsa Utama. All right, so that's a little bit about Howden. Okay, when you ask Katie, what do we do? Yeah, because we have 4 entities, there's a lot of things that we can do. Actually, we can do everything. Yeah,
anything to do with money.
Yeah, sorry?
Anything that do with money, then you do.
Anything that does with money, anything that does about protection, anything that does got to do with risk management, for example, we are actually very involved. Right? Okay, so what does Howden Malaysia do? First and foremost, before you can even talk about insurance, you can look at the risk profile. So we do a risk profiling of the client. And when you talk about risk, for an SME, regardless the size, Sean, regardless whether you are, going to the top of the 50 million kind of turnover, or your turnover is 10 million, it does not make any difference, because the risk that you face is similar, right? So as we do the risk profiling, you will see that the risk that is involved, first and foremost, the loss exposures will be property. So what is property? Your buildings, for example, your furniture, fixtures and fittings, your plant and machinery, your stocks in trade. So that would be property. So, if you own the property, or it sits on the freehold, we call it real property. It's not to say it's false. We use the word real property because it's like real estate. Attaching to the freehold or the leasehold, right? And then we have personal property, as what you mentioned just now, would be your furniture, your stocks, your plant and machinery, etc. So that is the first category of risk. The second category of risk is what we call income loss. What if your factory burns down, for example, touch wood, and it takes you like 6 months to, assuming it's a partial damage, it'll like take you 6 months to reinstate the property. You'll be out of pocket for 6 months, right? You still need to pay salaries, for example. If you have a loan, you still need to service the loan, because the bank is not going to be so kind. Sorry, I hope no bankers here. But not so kind and say, hey, you are a fire. You don't need to pay me for the next 6 months. It's not going to happen. So these are what we call fixed costs, right? So in terms of insurance, or rather in terms of your loss exposure, the second one would be income loss as a result of something that happens to your property. So that is your second, and it's a very key exposure. Okay, when you look at the topical thing that we are hearing now is COVID-19, obviously, right? It actually causes massive disruption in terms of income loss. Especially, even Sean will probably tell you in terms of the F&B, hospitality, the travel, and a lot of other companies were impacted. So the question now is, does a policy, insurance policy, cover COVID-19? So that one maybe later, Katie, we will actually talk about that, right? Because I think that is a topic that's in the minds of everyone until today. And even if we get out of this pandemic, which is probably happening, I don't know when, all of us don't have the crystal ball, maybe 23, for example. Yeah, what's going to happen between now and 23? Do insurers provide you the cover for COVID-19? Yeah, let's discuss a little bit further. So that is your second loss exposure. The third would be what we call liability. Yeah, what is your legal responsibility to the people at large? Sorry, Sean, since you are F&B, just making example of you.
No, it's good.
Somebody comes to your restaurant and let's say touch wood, there's some contamination of your supplies, and somebody eats it, he falls ill. And of course, he needs to prove that he went to Sushi Tei. It can be, food is one thing. Let's say he comes to your place for dinner, then you ask him, what do you take for tea? What do you take for lunch? It could be your lunch or your tea, right?
Correct.
It's an example, right, Katie? And then, if the guy can sue you, that is basically, he needs to prove, obviously, right? He needs to prove in court that you were the guilty party, for example. So that would be what we call the liability exposure. So that would be the third, right? And last but not least is what we call employee related exposures. From death, when you talk about death, I'm talking about untimely or premature death, right? You can talk about situations whereby if the guy retires, it's not so bad. Because if you have succession planning, you're able to manage that risk when the guy retires. But now in Malaysia, he's 60 years old, right? So it's hopefully before he's 60, you already put in plans. Or you may say that, hey, I want to extend your contract, you can retire at 65, for example. Yeah. So the other thing that we talk about exposure in relation to employees would be a key man. So obviously, Sean and Paul, they are key men of the company. And if they are partners, if touch wood, something happens to them, the partner, could be actually struggling. Because like for instance, Sean could be the key person. So there is ways whereby you can mitigate the kind of loss or exposure. Of course, the last but not least, like for instance, we are in the broking industry. If one of our employees leave to join another competitor, that to us is also an exposure, right? Because if he's what you call a superstar or a maverick, I see a maverick Chu here. So if you're a maverick or a superstar, for example, and this guy leave, potentially he can bring business along with him. Yeah.
Hold on, Eddie.
Yeah.
Are you saying that we can actually manage that risk as well, whereby to have protect our business by a certain kind of the business insurance should our key man, sorry, not key man, the maverick that you mentioned just now, join the other companies?
Unfortunately, I'm just generally talking about exposures at large.
Okay.
There are certain things can be covered, there's certain things that cannot be covered. Okay. Yeah, so in terms of insurance, when people talk about insurance, the first thing they say, oh, what is the fine print? But it's just a figure of speech, right? Because all the print is the same one. What it covers and what does not cover. The print is the same one. Same font, same size, same color, or whatever you can call it. But what is the, but unfortunately, not every risk that you face is insurable. Let's be frank.
Okay.
So that's why when we look at risk profiling, we look at what can be insured. And if things cannot be insured, we will sit down with the client and talk through with them what are the other means that you can actually put in place to try to at least minimize the exposure. Yeah. Okay. When a maverick leaves, you could have a lot of people do that. I think Paul, definitely you guys in the finance industry, you put in non-competition clause, you put in the non-solicitation, the confidentiality.
Sorry, Eddie, most of the SMEs doesn't know that. Okay.
Okay. So it's something that they should consider. We actually provide them consulting on that. But having said that, you know that it does not hold water. in Malaysia. There's a restriction of trade, under our Industrial Act. If you are employee, if like for instance, if I choose to leave Howden and insurance broking is the only thing that I know, it's actually very difficult for them to say that, they want to sue me for non-competition or whatever. So in a maverick situation, I think the best way in terms of managing this is to be proactive, look at your own HR policy to see how best you can reward the person. It can be by way of bonuses or even shares, for example. That's why we are talking about why Howden is what we are today is simply this. Because every employee can be a shareholder. And then once you're an employee, or you own shares of the company, then clearly, there is what we say skin in the game, right? So
no problem, Eddie. I will put in my application letter very soon over that side.
Please do.
Okay. Now I want to come to Sean over here. Okay.
Sure.
Because the SMEs right now, we are facing a lot of issues of the financial issues and so forth. Now, Sean, you as a business owner of the several restaurants and you run an outdoor media advertising company. Let's be frank. Let me just ask: is your business insured? What are the top priorities to protect your asset? What do you insure first in your business?
Okay, I think for us, insurance has always been I would say, one of my go-tos when it comes to risk mitigation. And thanks, Eddie, for actually laying out all the scenarios that actually I personally have already faced. And we actually thank God that I was insured at the time, so we have the means to actually recover. So I'll give some example. For us, our top priority in terms of buying insurance, obviously, is to protect our employees. So because they might get hurt while they're working and all that. So we have instances where our chef, when they cut their hands, it's serious. It's not like just a small cut, it's like a serious surgery. It costs quite a lot of money to actually get it treated and all that. So that's one instances. And then I also have customer who came into my shop, but thank God there's not food poisoning. He came in the shop, he sat down, he broke a part of a chair and then the nail came out. And it causes quite a big gash on his leg. So thank God at the time, we obviously also have our public liability insurance that we could cover. Then on other instances, obviously what Eddie's layout is actually very comprehensively explained. Obviously, there's three top priorities where I look at. First thing, I have to protect my employees. Second thing, obviously, we want to protect our physical assets, like our restaurants, our outlets. Because one thing that we run across quite a lot is, if you remember a couple of years back, actually quite a long time ago, Subang Empire, there was a big explosion of a restaurant. So it's due to gas leak. So ever that day, I haven't been into the F&B industry yet, but that scenario always was imprinted into my head. And we do come across a few times where we have gas leaking situation and we have to close the restaurant and all that. But in my mind, I know that at least I have a peace of mind in saying that at least I know I did all my part in getting my insurance done. Imagine you have a gas leak and you find out that you're not insured. You cannot just simply call and just buy one insurance at the time. So we're glad that we've done that. And also in our business, we want to protect our financial assets. In our premise, we have a lot of cash. Also in our cash in transit, meaning from restaurant to the bank, there are instances where
go digital right now. Go digital, scan. Don't use cash. It's half and half now. Obviously, cash is getting less. But no, when you go into bank, sometimes luckily there's no burglary yet. But there are instances where they lost the money. So there's all this in place we have. So to me, always has been quite a important tool. Me and my partner, we are quite risk adverse.
So
Okay.
yeah, we quite think about that.
I don't think this is about risk adverse. I think that this is about you care for the people that working with you, and you care for the people that comes to get your services. I think it's more about care rather than the risk adverse. Okay. Yeah. Then I actually wanted to move the question to Paul over here, because just now Eddie talked about what employees lah, the liability assets loss of income and so forth. And some people that I met, they even mentioned that right now there's something like what cyber insurance. You see, there are a lot of companies right now, we are going for the digitalization. A lot of information are in the cloud and so forth. And what if there are leak of information? Is there any insurance? So insurance is just the tool. Insurance is a tool, but financing to protect you is very, very important, because I believe that the cost of financing, for me, small businesses, maybe just a few thousand a year, but for companies like manufacturing, they got their plant, they got the machineries, right? It might cost them 100 to 200 or 1,000 a year, or even higher. I do not know. So, Paul, I want to know more about this insurance financing. Okay, I heard about installment, okay, for my loan, but insurance financing. Please explain the concept briefly, very briefly. Please tell us what is the concept of insurance financing.
Okay, thanks, King Tek. Very briefly, insurance premium financing basically is just a credit facility. The thing is that this credit facility is specially designed to pay for your business insurance. Now, the aim for doing this is to make sure that your protection or your insurance is intact all the time. Your protection is not interrupted. You see, what I mean is this. You know, Eddie can tell you this as well, in the sense that insurance premiums usually are due either in some cases before coverage begins, and in some cases within the 60 days warranty period. So when you don't pay your premiums, or when they're due and you don't pay, then your coverage may be interrupted. So when such a situation happens, if there's a claim, disputes on payment may arise. So
okay, hold on, Paul. Meaning that, let's say, for example, last year, the COVID, I'm very tight in cash flow. I was not doing business for the 4 to 6 months. I don't have money. Most of the money that I used to pay my employees and so forth, and there are priorities in using my cash flow. And for us, we see that insurance never mind now. Okay, we delay a bit. We delay 2 months. So are you saying that if we delay the 2 months, even after that, I continue to repay the insurance after that, the 3rd or 4th month, it will already be lapsed? And
yes.
we are not protected anymore?
Correct. So yeah, so after 60 days, when from the inception date, if your premiums is not paid, in theory, your policy is supposed to be null and void. Of course, there's always exception in handling it because of relationship and so on and so forth.
But you know, Paul, just to add on, KT, there has been a couple of court precedents in terms of this, and the court actually upheld that this premium warranty condition actually applies and is valid, right? So, you know, if things are okay, sometimes the insurers will say that, you know, okay, they close one eye and say that, okay, you know, you have not paid your premium, never mind, because your claim is only like 10,000. But can you imagine if your loss was 10 million and at the time of the loss, the premium was not paid? They could actually, you know, invoke this condition and deny liability. Yeah,
basically,
so
the company will close down. Yeah, basically.
Yeah, exactly. So when the matter goes to court, you could have a judge who will say that, hey, this is in the contract, right? Because insurance policy and is still a contract, right? Yeah. So, you know, they could hold it in favor of the insurer to actually say that, yes, you know, premium warranty, you have breached it, so the policy will have been voided.
Okay, so SME, remember over here, okay, please take note of your insurance policy, don't let it lapse. And coming back to you, Paul, how does this work, the insurance financing?
So basically what we do is that we will finance the SME. We will pay the insurance company first.
Okay.
Then the insurance then the SME just repay us back on a monthly basis on a pre-agreed schedule. Say for example, now you're supposed to pay within 60 days. We can sort of stretch that into a 6-month payment or 8-month payment, depending on your cash flow requirement. But what happens is we will pay first. We will pay the insurance company. Your insurance is intact. Your protection is there. If there's any claim, you don't have to worry. But the benefit out of this is that you now, as an SME, you can just pay on a monthly basis back to us.
Okay, but how can it be so good? Like for example, when the SMEs are unable to pay the insurance premium, meaning that the SMEs are in bad shape already, okay, so-called in bad shape already. If you go to the commercial bank, I'm sorry, this is the last thing. I'm sorry, there are bankers over here, I'm sorry. But like last year, those in the hospitality industry, they are the worst hit. But the thing is that when they go to the banks, that is the last clients that the banks wanted to welcome them. So for over here is that, well, are you going to really insure me because my business is already bad?
Yeah, so the idea behind it is this: when you need to pay your premiums, let's say your premiums is 10,000 ringgit, and your business situation is already very bad, right? Your cash flow is tight. And for you to come up with 10,000 ringgit, no way lah. If I have 10,000, I will put it into income generating expenses lah, right? That's my priority. So what we do is we pay it for you. Then instead of you coming up with 10,000 upfront, on a monthly basis, potentially you can pay 1,500, for example.
Okay.
And then you stretch it lah, for maybe 6 months, 7 months, you would have paid 10,000 ringgit. So it's just helping you time your cash flow over a period of installments, so that it elevates the situation. But most importantly, your insurance is intact and your protection is covered. Yeah.
Okay, cool.
I think
now,
also when we are talking, Katie, you don't mind. When we talk to some of our clients and then about premium financing, yeah, the protection is essential. But what they could actually do is this, because now Paul is giving them the opportunity to actually stretch their dollar in that sense, right? So the money, instead of paying the 100% to the insurer, they only paid, like for instance, 30%. The balance of 70% can be used for other purposes. So take, for example, if you are looking at the hypermarket or even a supermarket that actually, take supplies and it's like 60 days credit period, they could tell the guys, hey, I just need 30 days, right? Which means that they could probably have a discount because they are actually paying suppliers, within or even shorter than what is required of them. So it's also like, correct, Paul, it's like a cash flow management tool as well.
Yeah, exactly. So the ones that, the customers that we have usually apply for premium financing based on 2 reasons. One is affordability lah, because of cash flow, and I don't have the cash now, so I just want to amortize the insurance premium payments over a period of time. Now, the other customers, the other kind of customers that come to us is basically they just want to spread their payments up because of cash flow purposes. Because if, like what Eddie mentioned, I just pay 30%, that 70% that I retain, if I can reinvest it into my business, I can actually generate a return greater than the cost of financing. So in this case, it makes sense from a cash management perspective. So,
yeah, so this is about cash flow management and so forth. But now you see, since it is so important to protect our business, okay, there's so much risk over there, be it in terms of a fire, flood, cyber security, public liability, okay, key man insurance, so forth. It's so important. It's so important over there. Then, and there is a insurance premium financing. Why still 50% of the Malaysian SMEs are not insured, or most of them are underinsured? I don't understand. Why? Because
financing is available. It is critical for in our businesses. So why is it so? Eddie, can you give me three main reasons? Only three main reasons, not more than that. Three main reasons.
Wow, this is a very difficult question, no? Okay, the way I look at it is, as we said just now, right? If the awareness, I will always talk about the risks, the awareness of risk. And if it's something that I am not required to do, or if I'm in the business for the past 20 years, nothing has happened to me, why insure? Unless I'm actually mandated by, for instance, the bank when I take a loan. Right?
But Eddie, this kind of things, we are in mature economy, just like people like us say, okay, I'm so young, I'm just 20 years old, 18 years, I'm just up of the work. I'm so young, why do I want to buy insurance, life insurance? But people are buying right now. The awareness is high right now.
Yeah, correct. Yeah, so as I said, the awareness and the education of it, I don't know if you're talking about SMEs based on that report whereby they're saying 50% are not insured. I guess in terms of their asset size, in terms of their revenue, they may feel that, you know, is not something that is a priority. And
okay, so that's number one.
Yeah.
Okay, that's number one. Number two.
Oh, shoot. What's number two? Can the guys out here help me?
No, number two. Okay, four, can you help?
Yeah.
Then I will ask Sean. Sean is a very critical person to ask.
Yeah, you should ask Sean. I think Sean is a better person.
Okay. Let Sean speak first. Sean.
Yeah.
Okay. Now you see, you are aware of the business rates, and just now, Eddie has mentioned that the only reason is that the awareness. Okay. From the perspective of SMEs, maybe among your friends and so forth. Okay. What do you think? What will be the reasons that your business friends have not buy any business insurance?
I guess it will be the same scenario, like, you know, no one has got COVID before lah. In a way, you know, awareness is something that
we have passed by awareness.
Yeah,
awareness is one thing we show already. What will be the second and third reason?
I mean, you know, insurance is something that, you know, if you don't need it, you feel that actually it's a waste of money lah. You know, but you know, we thank God that when you need it, you thank God that you are insured. You know, it's that feeling like, you know, you can't.
In business, we are not dealing with feeling. We're dealing with business. It needs to be rational.
Yeah.
So just to add to that, the actual, based on the report, on the AIG report, where, you know, 50% of the SMEs are not insured, and if they are insured, 85% of them are underinsured. You know, the guys are right on the money. First of all, is lack of awareness. Second is education. They don't know what type of coverage are available to them. These are SMEs. And third is affordability. That's one of the reasons why we offer insurance premium financing. So imagine if this is, I think if I'm not wrong, the statistics came out in 2019. So in 2019, if the statistics is 50% uninsured, imagine today, after 1.5, 2 years of, you know, pandemic and cash flow disruption and all, what would be the rate today in terms of insurance coverage? It would be even worse. That's why, you know, premium financing is there to help with the affordability of insurance, and we need the likes of people like Eddie to create the awareness and to educate the market, which Howden is doing right now.
See, the thing is this, you know, people always feel, I'm already so cash strapped. How can I afford to actually pay premium? All right. But that is actually a total misconception, because, you know, if your balance sheet is very strong, you don't even need insurance. Yeah. Some of the, when I talk to some of our mega clients, they say, no problem, you know, if I get hit with a 50 million loss, fine, you know, because our balance sheet is massive, right? But if you're talking to a SME who's small, and if they have that kind of problem, can you imagine if there's a fire? There's no way they will be able to recover, because
are you saying that,
so, you know, cash strapped? Yeah.
So are you saying that if SMEs, if your business are not that great with your financial strength is not that strong, it is more important for the SMEs to consider this.
Exactly, because don't forget that if your asset is let's say 10,000, the premium is just a fraction of it, very small fraction. And can you imagine if we put in premium financing, you leverage on Paul's facility, then that particular fraction get even smaller.
Yeah,
right?
exactly.
So that is how we look at premium financing. It's just a leveraging tool that you can use, whereby your cost of insurance becomes even lower.
Exactly.
Okay. Now, Paul, I come back to you. Now, right now we know that Eddie has explained a lot in terms of what type of insurance financing. Are you going to offer the insurance premium financing for all types of the business insurance, or only certain type? Because you see, like, I'm sorry lah, previously I'm a banker also before. Okay, now banks is always that depend on where you open an umbrella lah. Okay, we always use this example. We use this example. The thing is that are you saying that you would finance all the insurance premium, whatever the insurance that you have, or you are very selective?
Yeah, great question. We do finance all types of general insurance that are annual, that means at least 12 months or more annual, and cancelable policies. Okay, so as long as you're an annual policy in this cancelable, we can finance you. So no issue on that. It's only certain cases where those are the non-cancelable policies. Correct me if I'm wrong, Eddie, like your merchant, where your marine, where you know the ship has left the port, you can't cancel those policies. Those we cannot finance. But as long as
motor, you got a problem cancelling a motor policy because of the third party act. Yeah.
Okay. Now, before I come to the next question, I need some the participation from the participants. Okay, over here. Can you please actually feedback in the chat room? Tell us, okay, in your own opinion, are you adequately insured in terms of your business? Are you adequately insured? If you are adequately insured, please type A. If you believe that you are not adequately insured, please type B. Let us see, okay, the survey by AIG says that 50%. Let us see over here how many percent of them is yes and no. Okay, let us see over here. Wow, you all can continue to type it in. Later on, I'll look into the chat room and see whether there are more A or more N over that side. Okay, so okay, over here now. The next question over here. Now, okay, insurance financing is there, and Sean. Now, the thing is that for you, you are from the, well, just now I read you from KPMG before, okay? From KPMG before, then consulting kind of work, you become more analytic and so forth. But I'm sorry lah, okay? Many of our SMEs over here, okay, even last time my father, even myself, I'm not that educated anymore. You talking about finance, I'm zero. I'm telling you the truth, I'm zero.
Yep.
So, where do you get to learn about all these business risks and financing and that? And if, okay, don't talk about that. Do you actually need a insurance premium financing or not? Okay, if you were to choose, okay, don't care about Cofundr over here. Okay, don't care about Paul over here. Don't worry. Okay, just be you.
Okay.
How would you set the criteria to choose a company who can offer you insurance premium financing?
Okay,
be real.
Yes.
Be real, please. Okay.
I'll be honest as I can, because I'm a very honest person. No, I think for me, it's circumstances has pushed me into this corner. Previously, we have never sort of have difficulty in paying the premium. But then, you know, what happened the last 2 years actually depleted a significant amount of our cash reserve and all that. Then, you know, while I'm obviously thinking how to spread my my money across, I'm still very worried that if I don't buy insurance, imagine there's an explosion in my restaurant. You know, the business will be wiped out. You know, you have to pay. You know, there's damages. You know, there's people might get hurt and all that. So, you know, when I met Paul and then he came up with this idea, to me, you know, it's something strike a chord with me because my idea is obviously to replenish my reserve. Whatever I can do to spread my money, I'll take it, you know. I'm talking to my creditors to have a better credit terms. That's one of them. Then premium financing is one that well, we are talking to Paul about of using his facility. So to me, it's circumstances that push me into this line, and I'm not the only one, you know. And we are considered relatively lucky because during the MCO, we are still considered lucky because we're essential business. We can still do 10-20% of our usual business. But during that time, if I'm not insured, one explosion, I'm dead. But explosion is a very extreme example. You know, I still have other exposure like what Eddie mentioned before that I need to look at. So your question is actually very, very good in the sense that how do we balance between cash and risk? So for me, always I'm trying to balance this scale. And the insurance premium financing for me fits my bill very well in a way. Yeah.
Okay. Now, so from just now, the short discussion for the past half an hour, what I have gathered over here is that number one, definitely there's no doubt about it that protecting our business risk is important for our business sustainability. That's number one. Number two, in terms of right now, there's availability of the insurance premium financing, which is not so much of the matter of whether you buy insurance or not insurance. It's the matter of cash flow management. It's the matter of actually how can we stretch our cash so that we can use the cash for a better, higher value investment.
Exactly.
Especially right now, during the pandemic, everyone is very tight. Yes, government is giving you a lot of the incentive here and there, but yes, a lot of allocation, but how much really reach our pocket, we still do not know. Hopefully, most of the SMEs have already gotten some benefit from the government. Some are still waiting and so forth. But very important over here that we must understand is that this is all about cash flow management. Okay, I hope there are some participants over here who are in accounts or finance over here who recognize the importance of this. Now, I have small business. But in Malaysia, because I am involved in the in this industry 4.0, I liaise with a lot of the manufacturers and so forth. And most of the time, all these manufacturers have the machines or the factories that worth millions and so forth. Eddie, just to get an idea of because for personal insurance, I know how much does it cost. But for business insurance, okay, is it really that huge financial burden? Or, okay, let's say, for example, let's assume that we have a company that we have assets, machinery, and the factories that worth about, not too much, let's say about 10 million, okay, not a lot, 10 million of the machineries and the assets. If I want to insure all these things, not talking about key men and so forth, approximately how much that give us a range?
Yeah, sure. If we are looking at in your particular instance, it's about 20,000. Yeah,
a year.
20,000 a year for a 10 million cover. Which you know, if you look at your other expense, it is not that much, right?
Yeah, it's not that much.
Because
So
you're
it's
protecting a 10 million exposure.
Yeah, correct. So protecting a 10 million exposure, you just spend a 20,000, approximately 20,000 a year. Then meaning that the insurance premium a month in average will be 1,000 plus, correct?
Yeah, close to yeah, 1,008.
Close to 1,000 plus to 2,000. Okay.
Yeah.
And right now, so 20 over 1,000. Right now, if I go to Cofundr, for example, okay, sorry, I still do not know who are the other competitors I won't mention over here. But let's say I go to the Cofundr. So 20,000, you stretch it. Okay, normally you need to pay. Okay, normally New Year time. Okay, pay insurance premium. Okay, pay ready and protected. Okay, but if I cannot pay that 20,000, and Paul, you come in, so we're gonna pay you money, is it? Or how does it work? How approximately how much we need to pay every month?
Oh, we got a couple of structures that you can do. One is like, say, we finance a certain margin out of the 20,000. Let's say we finance you 60% or 70%. Then that means you just pay 6,000. We will finance you 14,000, right? For example, and then you just pay the 14,000 over, say, 6 months. Just take the 14,000 divide by 6. The other way is even simpler. Take the 20,000, you divide into 6 payments. Every month you just make 1/6 of the payment. Simple.
You can't even pay a low-skill employee.
Huh? Yeah, I know, but this is what we can do. So you say 20,000. So you take 20,000, you just divide by 6. So every month you just pay 3,333. Okay? Before interest, before the financing cost, right? So every month just pay 3,333. So 6 months you finish paying it. But in between, what happens is we will pay the insurance company. Make sure your cover is in place. Yeah.
Okay, cool. Now, for the participants over here, please put in your questions into the chat box. Anything that you need to clarify and so forth. Just like me, I do not know much about this. Let's get some answers from the expert over here. Okay. Now, Paul again. Paul again. To get money. Okay, there are money allocation here and there from government, from banks. Banks they say that right now we are giving out a lot of loans. Government says that I'm giving out a lot of grants. We discussed about grants last week and so forth. But easier said than done. Normally, when we apply for the loan doesn't come in. We apply for the grant takes months to come in and so forth. Okay, how easy is it? Or what kind of the procedure that we need to go through? Because if you're gonna give me the insurance financing after 2-3 months kind of things, sorry lah, okay, it's too slow for me. So how easy is it for us to manage our cash flow by taking the benefit of the insurance premium financing?
It's actually a very straightforward process because we already have. Because first of all, we are structured as a peer-to-peer crowd financing platform. So basically, whenever we do a financing, we will bring your case to our registered investors. And for insurance premium financing, we already have a lot of investors all ready to finance premiums. So let's say you come to us today, you're an SME and you need insurance premium financing. It's first of all, it's pre-approved. Okay, it's pre-approved to all SMEs, right? Yeah, you pre-approved. Pre-approved, yeah. So pre-approved meaning you don't need to show me you don't need to be profitable, you don't need to have a guarantor, you don't need to have collateral. We only take an assignment on the policies. That's it, very straightforward. Okay, it's pre-approved. So as long as you don't have any adverse financial condition, because by regulation we still need to do background check on you for KYC. We still look at your financials and everything, but as long as you clear all those things, you will get the financing. We will raise the money for you. We'll pay your insurance company. You just pay us back on a monthly basis.
Easy?
Yeah.
Paul, you sound like all these loan shark, So I don't believe when things that is so good, people don't believe it. People believe it. Now, okay, one thing, we know banks are trusted. Okay. Because commercial bank long time ago, yeah. But the thing is that you want the Cofundr. I'm sorry, Cofundr. Okay, but I do not know you much. Okay, you're lending me money. Wow, that good, man, and there's no condition at all. Okay, that good. So, what makes you credible? What makes you credible to offer such services?
Okay, I think two points I'd like to make here. First of all, do note that Cofundr is a regulated platform. That means we are licensed by the Securities Commission. What that means is that the SC has already reviewed all our procedure, all our process, make sure our compliance is there, all our risks are mitigated, there's trustee accounts all set up. So, all those things are in place. That's what it means being licensed. So that's one. Okay, that's the first point. The second point is that what's unique to Cofundr is this insurance premium financing product. We structured it in such a way that I can give it to you if you want. Okay, as long as you give me an assignment on your policy. That's it. Because with it, I can place it with my investors and they're more than happy to finance it. So the question then is, why is it so easy? It's very straightforward. If you don't pay me, we will if you default, let's just say you default, the policy will be cancelled. When the policy is cancelled, then the unearned premiums come back to us. It goes back to our investors. So the risk is very much mitigated already. Okay. The risk that we are taking on is the insurance company risk, not so much the SME's risk. But what this does is that it provides the SME with the kind of cash relief to pay their insurance. So this is where we're finding the balance between the SME on one side and the, making an investment product palatable for the investors on the other side.
Paul, I'm sorry. Okay, being SMEs are very risk adverse. Very risk adverse. I need to ask all these questions so to validate the credibility of the company. Now, Eddie, before we start, I think that about something that we chatted and so forth, that you mentioned that this insurance premium financing is actually not new. Okay, but it's very new to me. It's very new to me. Can you tell me more about what is the practice around the world? Since you have the 90 territories around the world, what are the common practice? Is it common out there, or is this that we katak di bawah tempurung that we do not know in Malaysia?
Correct. We are katak, we are frogs, the frogs. Okay, jokes aside, the thing about premium financing, my first exposure to premium financing was like 18 years ago. Not even, that was way before my time in Howden. And Australians, okay, I'm taking an example, well, Australia is close. Yeah, premium financing has been around for a long time. They finance almost all kinds of premiums from their house. You're talking about their personal insurance. A lot of this is actually financed. Yeah, if you're talking about now, today, Howden in UK works with a company that actually funds close to 500 million of premium a year. Yeah, so and that is not ringgits. So it is actually something that's been going on for a very, very long time. And people, like I said, they see that benefit of having that leverage. Yeah. So for example, even the Howden actually has also a premium financing house. Yeah. But it's very different from Paul because that relates to ultra high net worth or high net worth individuals when they buy life insurance. Yeah, so it's a company that let's say okay, Katie, you're high net worth, all right. You buy a policy from me that will, depending on your age, I look at your age, so probably it's gonna cost you like okay, let's say 500,000 US.
Okay.
And you get like 2.5 to 3 million cover. All right. So now you're not going to pay me 500,000 US, for example. You say, wow, so expensive. But what I can do for you is I can finance for you that 500,000. And then you pay over a period of X number of years.
Yeah, okay. I understand that. Right now, I understand the concept.
How it works,
But I just very confused. Why Malaysia so slow? Why is Malaysia so slow? Malaysia, if you're talking about the financial institutions or financial system, it's not that bad. It's not that backwards. But why are Malaysia so slow?
Yeah, it's like I said, you see the Malaysian insurance market, you have, if you look at the distribution of the insurance market in Malaysia, you have about 60% I think, all right, I may be wrong. 60% is agency driven.
Okay.
If somebody comes to your shop and just talk insurance, then you buy because it's your friend, it's your uncle, you go party together, and then you buy a policy. So the question is whether these agents even know there is such a product in the market.
Oh, okay.
Again, it boils down to this, like I said, the awareness of it. But actually, Katie, when you think about it, Malaysia is in a way, it's a word for it. Generally people borrow, right? They use their credit card, they borrow, they buy a house, they borrow, they go holidays, they borrow, but insurance, they don't borrow. So that is a part why.
Yeah.
Because for instance, traditional banks are not doing this. They're only doing this, for example, if you take an MRTA, then they can finance MRTA, and then they charge you an arm and a leg, right?
Yes.
So there is this thing whereby FIs, as in the banks, they don't really see it until it actually impacts their own loan, their own selling of the loan. Let's put it this way.
Okay.
I need a banker before, you kind of know.
Yeah,
right?
okay.
So if I'm actually looking to buy a car from you, they will also obviously put auto finance. Yeah.
Yep.
But the insurance premium, actually they can finance one, but they don't. But they are companies, then you pay by credit card. So the other thing is people pay by credit card. So
yeah, but why pay by credit card? Interest is so high.
Yeah, exactly. No, but some give interest free okay. So
okay,
other thing.
Okay.
Generally, to answer your question, I think Paul will agree, right? There is this what you call it, the awareness, People are not really aware. I think if you ask the people in this room, you can maybe ask the question now. How many people know of premium financing?
Okay.
Why for yes and for no?
Okay. Now let's do this. Okay. Yes and no. Y and N. 1 and N. Okay. Before tonight, do you know about insurance premium financing? If you know about insurance premium financing before tonight, please put Y. And if you do not know about insurance premium financing, please put N. Now, while I wait for you all to answer, because many of you all still sit back and don't answer, I give you time, because right now I want to play a video first to understand a little bit more on the Cofundr services. DV, please. Thank you.
In the era where decision-making and order fulfillment is constantly shortened, insurance is critical to manage risk of disruption. Insurance, when it works as intended, provides ease of mind in the form of financial protection. With relatively small premium, you can get protected against large losses. COVID-19 is boosting innovation in a very positive manner in all segments of the industry, including the insurance industry, especially when it comes to accessibility of insurance. So now you have taken a significant step to protect your business with insurance coverage in case of unforeseen risks affecting your business. But the cost of multiple policies might hurt your cash flow. What if there's a way to simplify your insurance repayment by making it into more palatable monthly repayments? With Cofundr Insurance Premium Financing, now you can. Because we allow you to spread your cost of premium into equal monthly repayments. By doing so, you're able to free up your cash flow, hence paving the way for urgent operational expenses or business growth. At the same time, you're also ensured that your coverage is in place and your protection remains uninterrupted. So how does this work? Cofundr helps you pay for your policies upfront. And then you just simply pay Cofundr back over equal monthly installment. There's no additional security that's required other than just your insurance policy.
Oh, actually, it's timely for the market now at the current situation. And basically, I think if I'm not mistaken, it's worldwide. It's available worldwide. And the way I look at it, that will give an options to the consumer or to the corporates to purchase, to still can afford to purchase the insurance premium, the insurance cover without jeopardizing their cover. So I think to me, it also add greater value to as far as the insurance industry is concerned.
Okay, great. Now, I look at the chat box. I didn't see any why over there. Everyone over here is and. I don't see any why over here. Now, okay, I will leave my last question to the last section. But right now, let's go to the participants' question first. Okay, let's address the questions from the participants because, like for example, Subendran, he has a question that asks, what is the interest charges for the premium financing, and what is the interest charges for the premium financing? Hey, again, Paul, it sounds too good to be true. No, don't be like loan chart. Then we later got weight pain and so forth. Tell us more. You are muted right now.
Yeah, sorry about that. Yeah, just before I answer that question, I just want to make one comment. It's not surprising to see everyone is not aware of insurance premium financing. And that's exactly one of the reasons why the Securities Commission mandated us, they gave us this P2P license in order to launch this product and introduce it to all the SMEs. So, that's one of the strong purpose of us getting the license. And our objective is to share this with as many SMEs as possible, and hopefully they benefit from it and that they can afford their insurance and then, get their assets protected. Now, to answer your question, what is the insurance cost?
Interest charges.
Interest charges, okay. Of course, we took all this into consideration when we were doing this. Right? If it's a very expensive financing cost, then it defeats the purpose, right? Because your insurance cost will go up tremendously. Now, we are very pleased to share that we found a way where we can sort of structure it. Again, the Securities Commission is aware of this structure and everything. Structure in such a way where we can offer it, especially now, because now is the time where a lot of insurance renewal is happening. The financing cost of 0.625% per month. 0.625% per month. Okay. So why I say per month is because it depends on how many months you are spreading your payments to. Okay. So some you may want to spread it for 6 months, some you want to spread it to 8 months. It depends. But if you ever put it into context, that means all in costs, your legal costs, platform fee, your financing costs, all in, you are paying slightly between about 2.5% to 3% more in terms of premium. So if you are paying a premium, for example, your policy is 10,000 ringgit, right? And if you take premium financing, finance a certain amount and those kind of things, you're only paying about 250 ringgit more or 300 ringgit more, depending on how many months you're spreading it. So averagely, you're looking at about what, 40, 45 ringgit a month?
Hey, Paul, that's my rate, right?
That's your rate.
Thank you.
Okay, hold on. Let me get it clear, okay? Yeah. So if let's say, for example, the premium financing is at 10,000, and the cost of it would only be approximately 2 to 3%. 0.2 to 3%.
Based on your premium, yes.
Okay, so based on the premium, let's say 10,000, so basically is that 200 to 300 ringgit?
Yeah, 200 to 300 ringgit.
A month?
No, the entire thing.
The entire thing?
Yeah.
So then basically a month even lesser.
Yeah, so let's say the 10,000, right? Okay, again, of course, we are not financing you 100%. We're not going to give you 10,000. You pay a little bit, you pay a portion of it. You pay 20% or 30% or 40%, depending on how much you want to pay. Of course, if you pay more, the less financing amount, it costs you less. So it's a chicken egg situation, right? I mean, it's a balancing act. So whatever you finance is at 0.625% per month. But if you work it out averagely, let's say it's a 6 months repayment, you're probably paying about 250 ringgit more based on a 10,000 ringgit total premium.
Yeah, just now Victor actually put in a question that 2 to 300 per month, but from what I answered is that 2 to 300 for the whole sum, not per month.
Yeah, for 6 months. If it's
for 6 months.
Yeah, 6 months. Yeah.
Okay, that is very affordable.
Yeah. No, our objective is not to is to make sure that the SMEs are protected. Okay, because in my as of we used to be in the bank, and we've seen before a lot of businesses that were not protected, and something untoward were to happen, they can lose the business overnight.
Okay.
So the objective is to make sure that we can help the SMEs with regards to affordability of insurance.
Yeah. Now this question I will certainly I would like to ask Eddie, but I don't think that I need to ask Eddie. I need to ask Paul, okay, because Eddie's side is so big, millions. So I'm talking about ikan bilis right here, okay? Ikan bilis. How low is the financing amount that you accept? Okay, SMEs a lot of them very ikan bilis are very small. How low, okay, that you accept? Would you accept a very small amount?
Yeah, that's a great question. Okay. There is a little bit of a fixed cost in the processing fee is fixed in there. So we encourage if your premiums is about 10,000 ringgit or more, go ahead, take the premium financing. It doesn't mean that if you have less than 10,000, you cannot take premium financing. You can. But what I'm just saying is that there's a processing fee that is fixed there. So if the amount that you take, the premium financing amount that you take is lesser, so it will appear like the fees is higher to you because of the fixed processing fee. You know what I mean? So if it's a higher loan amount, of course, the processing fee becomes more insignificant in this case.
It's
so
still called standing charge.
Standing charge. So, average about 10,000, but we still do anything less than that. But then we will encourage you, especially if you have 10,000 or more. Now, just now, the rate at 0.625% is a promotional rate that we are doing from now all the way to January 31st, 2022.
Oh, okay.
So that one is like, you come in now, we're going to give you this special introductory rate because we will offer this all to our investors as well.
Okay, let's have coffee soon.
Sorry, Katie, I just have a question for Paul. Your 10,000, is it on per policy basis or per company basis? How do you look at it?
It's on a multiple per company, but multiple policies.
Oh, that's fine. I mean, 10,000, a lot of people who have paid, definitely more than 10,000, right? Katie, you got so many policies. Yeah. You got your personal accident, then you got your money as
yeah.
Added up will be more than 10,000.
Yeah, definitely more than 10. Most of them, even SMEs, they pay more than 10.
Yeah. There's a comment over here from Thomas actually. This is what he says, okay? I service certain sector that take up annual insurance that generate premium in excess of tens of thousands. And sometimes the said sector are not able to pay the premium even with 60 days premium warranty.
Right.
However, this sector will be able to pay the premium over time. Yep. Your premium financing seems to be platform that we can move with. I believe Thomas, he must be a insurance agent as well, or someone is in the industry. I'm not too sure. Yeah. Then over here we have the NR for insurance premium. Is it possible to have a repayment tenure of 12 months? Insurance premium for the question is that for insurance premium, is it possible to have a repayment tenure of 12 months? Normally they don't, right?
Normal is only 60 days warranty period, so you need to pay within 60 days. Under our premium financing, the maximum tenure you can go up to is 8 months.
Oh, okay. Okay. I hope I hope we answer your questions. If not, then put in your extension of the questions over here. Then Terence asked, does Cofundr tie up exclusively with any insurance company, agent or broker? Yes, good question over there. Okay, well, the thing is that if you tie up with any, then we have to go to the insurance company. I don't like the insurance company, but I'm forced to go to insurance company, so I do not. Okay, SME doesn't like to be tied down. So tell us, Paul.
We are not tied down exclusively with any insurance agents or brokers, but of course we do have preferred working arrangement with some agents and brokers, like the likes of Howden is one of our preferred partners in working together. So, but there's no exclusive arrangement. Hello? Yeah.
Okay. Cool. The coconut ice. Very nice. You should really try it. Okay.
I just saw your eyes moving and I said, no, it wasn't a frozen screen.
Mike, I allow you to do a little bit of the promotion. You can type in what is the brand of your coconut ice cream over there. Okay, I allow that. Okay, I allow that. Okay. Okay, since I like it also.
Thomas, do get in touch with us. Just drop us an email. We're more than happy to work out with you.
Okay. Mike asks, how much is the processing fee? Again, we think that it's too good to be true, you know. Is it later on you charge the processing fee? Your interest is only 200. Your processing fee is 2,000.
No, everything we do is regulated. So everything is it will appear onto the website. Because we are regulated, so we cannot fly by night. You suka post you tell you one price, then when you come in, we charge you 3 times more. No, we cannot do all those things, because we are under the Capital Market Services Act. So if we do that, then I get called up for coffee at the Securities Commission.
So meaning that the processing fee is very transparent already in your website?
Yeah, everything is there. So, but the promotional, of course, this is a promotional. You see on our website is 1% a month, but this is what we're doing is 0.625 is the promotional rate.
Oh, okay. So you right now having the promotional. Okay. Coffee on me, promotion on you. Okay. I think that calculation I still win now. Okay, Ken. Okay, Ken. Now, wow, this is calculation. Gosh, I hate maths over here. But Terence asked, okay, Paul, you might want to look into the chat box over there. When it comes to math calculation, I'm very poor. Okay, Terence asked, 10,000 times 0.624% equals to 62.62 ringgit 40 cents per month. 3 months is 187 ringgit. Total repayment is 10,187 ringgit and 20 cents. Or what? Is it correct or not?
Your method of calculation is correct. It's just that you assume the premium is 10,000, right? So you're assuming the loan amount, the financing amount is also 10,000. So again, we don't finance 100%. We finance a margin of the premium. So let's just say if it's 80% financing, so you would take 8,000 times the 0.625% per month. If it's 5 months, you times 5 lah, kind of thing.
Okay.
Total financing cost. So again, what is the margin of finance? Our standard one is like, you come in, you can just take this 10,000, you just divide by 6 every month, you just pay 1/6 of it.
Okay.
Just drop us.
Please keep the questions coming. It's becoming more and more. I'm getting more clarity over here in terms of how can we benefit from it. Let's learn together. But while you're putting in your questions over there, I'm curious. Okay, I'm very, very curious. Number one, you said that the SC is promoting it. Okay, it's encouraging it.
We present it to SC and SC is
yes. But I don't see Bank Negara is doing a lot of promotion, a lot of awareness. Why isn't the government actually having right now we are in cash flow is so tight. Why isn't the government promoting it actively?
With this insurance premium financing, what we are offering is a private arrangement, right? So the government won't be able to promote us per se.
Yeah, but at least the concept. As I mentioned, that we do not know about 100% of us over here do not know about insurance premium financing.
Yeah, the concept, why is the SC is because it is under a peer-to-peer crowd financing platform. So because it is a peer-to-peer crowd financing platform, it goes under SC. If it's say a credit lending model, we will.
Okay.
So the way we structure it's in a way it's still a lender and a borrower, except that in this case the SME is issuing a note, a promissory note to say, I will take 5,000 from you, I promise to pay you back in 5 months. Example.
Okay.
Take this note and then we will let our investors subscribe to it. Because peer-to-peer, So we're connecting.
Yeah, frankly, I still do not understand very much of the peer-to-peer financing thing, which I think that next week we can discuss. But I really wanted to know about peer-to-peer financing because the banks are closing doors to me already. So I need to know more about peer-to-peer financing. Next week we'll be discussing about it. Now, the thing is that Paul, since right now we have a survey just now that 100% of those who have answered doesn't know about insurance premium financing. Okay, in the coming months, okay, because if I do not know you and Sean doesn't know you and we do not organize this web forum, all of us over here doesn't know about insurance premium financing. That's bad. Coming months, is there any activities and so forth to create awareness? Please, I think that this is very good to help the SMEs, which is very difficult shape right now. Okay, awareness need to be placed. So that's why that Bizsphere we wanted to have this strong, mighty, enterprising SME web forum platform. That is the purpose. So from your side, what is there going to be any more awareness activities, that engagement and so forth?
Right now what we do is we work with a lot of insurance company as well as Takafu operators to share this program with them to get to their agents and their intermediaries, so that the intermediaries can then share it with the SME customer or their corporate customers. So that's basically how we roll out the program. So we're fairly new in this. That's why the news is starting to trickle out. But in terms of event, in January, we will be doing a fintech event which is organized by Bank Negara, where we'll be one of the exhibitor, where we'll be presenting the insurance premium financing model to the public at large.
Okay, good. Make sure you send me the information, then I can disseminate it to the to my SMEs community as well. Now, over here is that I want to turn the questions. It will be the last question to Eddie right now. Very important person over here is that now, Eddie, you have been in this industry for so long. You have the international exposure and so forth. And I have to say that for our program, because I know a number of the government-related agencies, it might be some of the government agency rep over here that is listening. Okay, I want from your own viewpoint is there anything that a certain agency should do more, and what should they do to promote insurance premium financing? Maybe you have some exposure in other countries. How do they do it? So can you give your opinion of what can be done better?
I think because this is a SC approved product, I think the central bank, which regulates insurance and supervises it, should actually play a more active role in terms of letting the market know that there is such a thing that is called premium financing, because the insurance is actually governed by them, right? And the policies, there is very clearly stated there's a premium warranty condition. Yeah, I think it is remiss of us not to mention to the insureds in general that there is such a facility that is available. So you're talking about which regulator, it definitely has to be Bank Negara, and maybe the domestic trade as well. And SME falls under domestic trade, right?
No, SME, we got SME Corp that coordinate among the industries.
Yeah, and it as we talked about, it actually helps facilitate their cash flow, especially in these trying times. And they still need to buy insurance, because like I said, if you do not buy, just because you think that money can be well spent somewhere else, can you imagine if there's a big loss? You could sorry, I'm not sure, but definitely you'll be in serious trouble. And then that's where you say, the umbrella won't be opened by the banks, right? That's how banks work, we know, right?
Yeah. Okay. I hope some of
the banks like the whole night.
Okay, I hope some of the SME Corp officers over here, I will try to talk to the SME Corp CEO and see and reflect this to him that that's important thing. Okay, now for those of you here, I can see one or two are leaving the platform right now, but don't go off yet, because if I'm not mistaken, Paul, you have some goodies for the participants over here. You want to share it out?
Sure. Okay, I've actually two things. One, I just want one comment is that I know some of the SMEs out there, you think like premium financing is a very trivial thing lah. It could be 5,000, 10,000, 12,000. I I can pay it off and all this kind of thing. But I still encourage you to take up the premium financing if you can, especially if you don't have existing credit history. You know, you're a new SME, you don't have the credit history. Take up this offer, leverage on this. Why? Because it's pre-approved and it's a very cheap financing, right? But what you do is create that track record so that next day when you need the working capital at that time, you can reference this as your, your credit history. Whether you come back to me to raise money or any other operator or to the banks or whatever, at least in your CTOS report, there's a loan you've taken before and you repaid back on a timely basis. So it shows credit history.
I think that's a very good idea, because I remember when I tried to take loan, this is the first year I took the loan now, okay? Last time I didn't take any loan, okay? And they were asking, you don't have loan history? Wow, typical. The officer might ask a lot of questions and so forth. Yeah.
Correct. So this is a good chance for you, because it's a short-term loan. It's a 6 months. It could be an 8-month loan, and it's very easy payment, and you're paying minimal interest costs on it. Those kind of things. So use it as a way to build your credit history. Now on the offer, what we're doing is that of course the insurance premium financing is offered on a pre-approved basis. So if you're keen, just go to our website at cofundr.com.my. and then just click get funds, go to select my premium, finance my premiums, and you just fill up the form, give us your insurance information, and you're done. We'll give you a proposal, then you can take a look at it and see whether it's palatable for you or not. It's very straightforward. It's all this information is at cofundr.com.my.
DV, you have a slide for that, so that it's easier for the participants to actually copy. DV, can you show that out?
Yeah. At the same time, also, we, apart from insurance premium financing, we also offer working capital financing. So if you are looking for working capital financing, you can also consider P2P as an alternative source. But what we are offering is that we are offering a complimentary sort of credit health check. Basically, what we do is if you fill up a consent form from CTOS, you sign it up, you pass it to us, we'll do a CTOS check for you and then run it through our own internal evaluation model and give you a score and give you a perspective as to, where are you in terms of your SME today? Is it you qualify for certain financing? If you do, then what kind of rates probably you will get? Just to give you a perspective of where you are. This is if you need the working capital. Even if you don't, it doesn't cost you anything. In fact, we're doing it on a complimentary basis. So
at least that we know our credit ratings. Are you saying that?
Yes, at least you can get an idea. But it involves you consenting to, of course, to do a CTOS check, you need to consent to it so that we can.
Okay, cool. I think that now, which is Eddie, how can you play a part in helping the SMEs? Okay, DV, you have anything from that we can show about Holden, or Eddie, you get anything to share that how can you help the SMEs?
Yeah, as I said earlier, in terms of the risk profiling, looking at what kind of exposures there is faced, all they need to do is get in touch with us. We can do a review for them. Yeah. So
of course not do review
is on the website. Yeah, we don't call it an audit. The audit, is like a big name, very serious. We just do a desktop review, look at the nature of the business, and then we'll map it against our template in terms of the various exposures that could be faced by them. And then we'll take it from there. Yeah.
Yeah, but sorry, SME very practical. got cost involved or not?
Like I say, if it's a desktop, and there is very, I don't know. I need to talk to my team, obviously. Like for me, I would say there's no cost involved. But then my team say, why do you ask? Why say no cost involved? But we can talk. I mean, there's something that definitely, just communicate with us via a website. I think it will give you, anyway, just visit it to begin with. It will give you a picture of what we can actually help the SMEs.
Okay. Thank you. Now, just I'm closing the session right now. Is 10 minutes past 10 already. Now, I just need an advice from each one of you based on your experience in terms of the business risk. Only one single advice that with the current economic situation that we are opening our economy, that we are so-called going towards the recovery stage, what is the one thing, whether it's related to insurance or not, whether it's related to premium finance or not, it's okay, but it's just based on your professionalism, what would be the one thing that you would advise the SMEs to do immediately? Immediately meaning that for the next 1 or 2 months, they need to actually work towards it. I would start with Paul first. Sorry, I will start with Sean first. Sean has been very quiet. Okay, I will start with Sean first.
If I would say, build up your cash reserve.
Develop the cash reserve. Okay.
Build up your cash reserve. You never know what will happen.
Okay, cool. Thank you. What about Eddie?
For us, obviously, from an insurance standpoint, why don't we leverage in terms of the tools that are available at a fraction of the cost? Right? To me, that is what we should be looking at, like in terms of meeting this uncertainty.
Okay, cool. Thank you. Paul.
Okay, I think in these times, we all need to be adaptable in terms of our business model. So like Cofundr, one of the things we do, this is very different, right? Insurance premium financing, you don't see this with any other P2P. By the way, we are the only one that's offering this among all the other operators. So the message...
You mean that there are no other players? I want to compare price also cannot.
You can compare, but they don't do insurance premium financing. And this price you cannot get on. I mean, this is like promotional kind of,
Okay.
Yeah. So just I guess we need to be resilient and be adaptable to the market,
okay. Good. Thank you all. And for me, I would say that because all of us, the SMEs, we are starting our journey towards the digitalization, automation, and Industry 4. And all of it would involve a certain level of the data that is very crucial to our business. I think the cyber security, the cyber insurance is something that all the SMEs should start to look at. It is something that is very new, but I think that SMEs should start to look at it because right now, once your data is lost, okay, just imagine your laptop is lost, all the data is there, so you have a lot of headache. And if you actually put an analogy to what will happen to your business if the data is lost and so forth, I think we should actually start to consider that as one of the options, not one of the need to actually protect our business needs.
Correct.
Okay.
If I may add on, there are actually packages that actually try to cater or address the issues that we face on cyber for SMEs.
Okay. Yeah. So if you want to know more, please do contact AD or contact Paul. I will try to get some information from Eddie if you are willing to. Then I can get some information. I can share it with everyone. That would be great because even if we want to, we do not know where to go. Yeah, that's the issue of SMEs. sometimes if we want to do something, but we don't know where to start. That's the issue of a lot of SMEs. With that, thank you very much all. Next week, same time, same day, 8:30 p.m. We are going to talk a bit about P2P financing, okay, and how to build and get a great credit rating and so forth. So please do come back again next week. Continue when we email you, please respond. When we WhatsApp you, please respond. And we hope to see you next week again. And if you think that this strong, mighty, enterprising SME financial management web forum series is useful, please encourage your friends and business associates to come in, register, and I'm very confident that over here is that we are sincere in sharing a lot of the information for you to grow your business. And we hope that you are in the road towards recovery as well as expansions, taking the opportunity of the opening market right now. With that, I'm King Teck, the managing consultant of the Bizsphere Brand and Marketing Group. Signing off over here, I would like to take this opportunity to thank Sean, Eddie, and Paul sharing with us something that none of us know before today. Okay, 100% none of us know before today. Thank you very much, and we hope to share more to the other SMEs as well. Thank you, everyone, and please come back next week. Thank you. And we will close the session in 1 minute time. So if you wanted to jot down the contact of the Howden or jot down the contact of Cofundr, please do so right now. Okay, thank you very much, and I will see you next week again. Thank you.
All right, bye-bye.
Good night.
Hey, while they are checking out, I'm very surprised that the brief poll that we have done just now, really none. I was surprised. None. Actually, none knows about it. So that shows how low the awareness level.
Yeah.
And I was, at least if you're talking about grants and so forth, a lot of people still do not know, but there are some of them know a lot about it. But for this insurance pre-financing, none of us know about it. And Paul, you should do your part, okay? Be it for your business or be it for the interest of the SME community, you really ought to do more awareness outreach programs seriously, because the SMEs really need that.
That's why I need your help, brother. That's why you have the access to the SME so that I can share this with them.
We will do. The thing is that we will need to convince the leaders of the SMEs first. Okay, if the leaders don't even know about this, they will say, "Wow, another event," and so forth. So we need to engage the leaders of the SMEs so that they understand the importance and the benefit of it. Then we will be able to actually get their buy-in. When they get their buy-in, they'll be more willing to share with the members, because all the associations, their key role is to help the SMEs. I don't see why not. Over there. Yeah.
And then, like what Eddie mentioned earlier, this is very common in Australia. 1 in 3 policies are premium finance. So they go in, when they want to buy insurance, it's like, you want to pay full or you want to pay in installment. So it comes standard already.
Okay, good. So we have 30 seconds more before we close the session. Thank you very much for those who are still in. Those who are still in, if you need any SME advisors or branding and marketing advisors or any services, again, do a little bit promotion of Bizsphere. We are a strategic branding and marketing company that helps the SMEs, especially. We're very focused on the SMEs. We also help in terms of transformation. Especially right now, we have the Industry 4.0. How can you transform over there? And if you have a financial cash flow, you need some advisory on the government incentive. We also do so. We also do some training. So do contact us if you have any concerns on issue. If we do not have the expertise or do not have the knowledge to help you, we also hope that with our wide network with a lot of the government agencies and a lot of trade associations, we will be able to actually connect you with them. So do follow us in our Facebook as well. We put all of our information in our Facebook. Do follow us, and really looking forward that SMEs will soon be elevating yourself to the mid-tier companies and to compete regionally and also global. With that, thank you very much. 1 minute is up and we are closing the session. Thank you, and we will see you next week. Thank you very much, everyone.
Thanks.
All right,
guys.
bye-bye. Good night.
Thank you.
Thank you. Bye.
Good night.
Bye. Get some rest, Eddie.
Yeah, we'll do, man. Thanks.
Yeah, get some rest, Eddie. Thank you. Bye.
Thank you. Bye.
Bye.
We'll be in touch.